What's up, everybody? Today we're going to learn about MMXM. So, what is it? Before we get into it, just wanted to make sure that you understand all of these. You need to know what PDRA is, liquidity is, displacement is, engineered liquidity, neutralizing liquidity, fractals, market structure shift, and fair value gap. All these are smart money concepts, and these are mentioned in other videos. You need to understand all of that to be able to understand this video, or this is not going to make sense to you. It's just tying all those concepts together and making them into a model so you know what to look at when you're in the chart looking for trades. All right. So first of all, what is it? So this is a model that uses smart money or ICT concepts to determine entry points or to determine the target points or take profit levels. It just gives you a framework or kind of like a model so you know where to enter and where to take profits, and it just gives you an idea of how the market moves, right? It just ties all the smart money concepts together. So how the market moves? The market moves based on liquidity. There, like I told you before, like above each high, we have liquidity. At any time frame, we have liquidity above each time frame, and the market moves towards that liquidity. It acts like a magnet, all right? Whenever there's liquidity, the market is going to move towards it. So you need to understand that. And number two is to rebalance inefficiencies. So what do I mean by inefficiencies? Inefficiency can be a fair value gap, or it could be a volume inefficiency. We can talk about volume inefficiency later when we talk about the volume trading, but right now just focus on smart money concepts. That is, you understand that we're just talking about fair value gap. However, when you're trading in real time, you need to understand that the volume inefficiency is on a higher priority list than fair value gap when it comes to inefficiencies. And the market moves to rebalance equilibrium. Equilibrium is the premium and the discount that I taught you in the Fibonacci, right? So these are the three reasons market moves: to sweep liquidity, or to rebalance inefficiencies or imbalances, or to rebalance the equilibrium, right? And what to do? Okay, before we get here, first of all, let's understand what it is. So this is what we call, first it goes for accumulation, and then goes a little manipulation, distribution, and again goes for accumulation, and it goes to a bottom, and then does the same thing and does the same thing. All right, so this right here, this whole thing is called MMXM model. This happens on all time frames, on any asset that you could think of. Like, this is how the market moves, right? This is a bullish scenario, and this right here. See that? The exact same thing. Accumulation, and then goes up, and then do you see that? Like, it just goes up and down, like in the same fashion. Like, it accumulates, and then a displacement occurs, and then accumulates, and then another displacement occurs. Like, that's how the market moves. You need to understand that. Let me delete that. Let me show that in a real-time chart. So take a look at this. So here you see accumulation, and then another accumulation. So how do we trade this? First of all, you need to understand one thing. So when it is doing this kind of accumulation and then it distributes, what really happens is that it is engineering liquidity, right? So what do I mean by that? Let's say this is the accumulation range, and then this is the accumulation range, and this is the top. This is the top, and then it accumulates again. So what happens in these ranges? So let me first tell you how to identify these models before we get into the trading aspect. So here, the first thing you need to be doing is to mark out the PDRAs on the higher time frame. All right, let's say this as an example. So you are marking out a previous resistance area, right? So this is your PDRA, that is your daily resistance. So when it comes here, you know that it is going to reject, right? So when a rejection happens at a PDRA, you know that a divergence happens. That's when you know that this is the bottom or the top. It happens on all time frames, all right? It's not just this time frame, it happens on every single time frame. So, it is on 3 days, so you don't see it properly, but you can see the divergence here, right? At every bottom, you'll see a divergence even on 1 minute time frame. Like, if it is bottoming out, you'll see a divergence. Sometimes you tend to think like, how is she calling it a bottom and it bottomed out, and how is she calling it a top and it topped out, right? That's what it is. Like, you'll see this kind of divergence at the PDRA. That's when you call it a top or bottom, right? And what you need to understand here is that after the divergence happened, every single accumulation is where the engineering had happened. So here, this is an accumulation. Just to have a differentiation, I'm just changing it to a different color. All right. So here, this accumulated, right? So what do I mean by engineering liquidity? See, when an accumulation happens and a displacement happens, what really happens is that the second accumulation happens on the opposite side of it, takes out the liquidity below it, and goes up. See, here, it accumulates exactly where it accumulated here. And then it takes out the liquidity below the previous low. See? You get it? And then let's see another accumulation. So here, before the distribution happened, here it accumulated, right? So what happened here? Opposite side of the accumulation. Takes out the liquidity below it and then moves up, right? So this happens almost every single time frame. You can go to 5 minutes, you can go to 15 minutes, you can even go to 1 minute chart. You'll see it. Let me show you. See, this is a higher time frame PDRA. You see a divergence, and then you have accumulation here, and what happened? Liquidity taken out, and then it starts dumping. And you have another accumulation here. When it reaches this point, liquidity gets taken out, and then it starts going down. So this happens on every single time frame. Why did I tell you that it is really important for you to understand this concept for trading next week? So let me explain that. As you can see, we are here, and we have the MMXM form here. So here you have a beautiful accumulation. Here you have another beautiful accumulation. And here you have opposite side. So see, you have previous high. So how do you trade this? So here, as you can see, a divergence happened. So this is the bottom. Divergence happened. And here you have the previous high. So if you are taking this is important. You have to wait for the divergence to happen, and then you wait for the first internal market structure shift, and then you wait for the optimal trade entry, like you pull out a fib from swing low to the swing high. It does not necessarily get to the optimal trade entry all the time. All right, remember I told you the PDRA is like, where to enter. This was one of it. Like, it started with an OB, and or is a long position. Okay, here. So you take a long entry here. Where do you target? You target immediately above this accumulation, like the highest point. You take profits here. All right. So the next thing, now that the accumulation has happened here, you take the next. Here there was a fair value gap, right? Here you'll see a fair value gap. And what is probably going to happen here is, I told you the target is 42K for this week, right? So let me tell you what happens. So here the accumulation finished and displacement has occurred. So this is going to do something like here. When it comes here, what is probably going to happen is displace again with the target of here. Something like that. Once this structure breaks, it has to take out, see the previous high, sorry, is something I missed. Look, this previous high already took out, like there was an entry here, and it already took out the previous high, right? So how do we trade the next thing? So you have to wait. So this MMXM is already done. Like this accumulation is taken already, right? So how do we trade the next set of trades? So you have to wait for the market structure shift to happen. So where does the market structure shift happen? It happens here. It has to break this one in order to short. That's why I told you you cannot short until this level is gone. You have to wait for it to chop and chop, and this structure has to happen again. It has to like accumulate, and then it has to touch previous high, and then it has to form this, and then displace, and then form and displace, and then pump. All right, so this is how the market moves. You can't, market does not move like that, right? So the market moves like that, accumulates, and then it does a divergence, and then it goes down. Let me show you something else. Even here, do you see the divergence at the top? That's how it goes. In every time frame you'll see it. So coming back to here. So first of all, you need to identify the PDRA, and then identify the original consolidation range. That is these consolidation ranges, and then identify the buy side and sell side of the curve. Like this is buy side of the curve, and this is sell side of the curve. So you need to understand how these accumulation ranges are formed, so you can take trades. Your entry is typically at optimal trade entry, or it can be at fair value gap, or whatever you enter, previously. But your take profits is always the highest point of the accumulation range if it is a long position, or the lowest point of the accumulation range if it is a short position. For example, if you're taking a short position here in this accumulation range, your target should be here. All right, so that's how you trade this one. And we're gonna enter somewhere on here, and which is this accumulation range. This one right here. So you can possibly take out the liquidity below it. Sorry, the lowest point below it, and then it starts going up. All right, so this is the reason I wanted you to understand what this MMXM is, because it helps you trade the next week, the coming week, better if you understand this. All right, I hope you enjoyed this video, and we'll talk soon in the next video. Thank you so much for listening. Have a good day. Bye.